What's up, y'all? Hella Pablo here. It's been a while. It's been a couple months. Crypto's not all I do. I do other stuff, business, and but I've got some time now to get back to crypto, and I thought I'd upload just a quick video. Real basic. I can't be here long. This is just Bitcoin, where I think we are right now, and just some thoughts for you to chew over as we contemplate what's going to happen this year with Bitcoin. There's a whole group of people that say it's Bitcoin, we're in a bull trend, and it's just going to keep going. It's going to keep blowing and going. And then there's others like myself who think this is a counter trend, and at some point we're going to hit the top, we're going to have a blow off, and then we're going back down to mitigate area, maybe not as low as 16,000, but somewhere in the $20,000, $18,000 range, which I think is very feasible and prudent. So, that in mind, let me just look. Let me just show you what I see. So this is the Bitcoin. This is on a 2-day. This is Coinbase, starting from the history on Coinbase from 2014 all the way to the current. And I'm going to get some trend lines, and we see these two cycles here. We can have a macro trend there, and then we'll also do the same thing with the bottom. And what we're looking at here is, obviously, those of you who know anything about trading, this is a symmetrical bull triangle. It came out of a uptrend, and we have two tops here. We have this top here and this top here, and we have two bottoms. We have the bottom here, and then the other touchdown here on the macro trend support. And then here we have the textbook breakout, retest, and boom, shakalaka, straight up into the cosmos. And I don't have to explain what happened after that. The thing I want to point out to you is this symmetrical structure that we saw on these previous cycles. We have let's say 1 and 2 for the tops here. This one top, I believe, was the highest point, and then we came back down, and then we came back up again. We created a bottom, and then like a top, a lower high. The lower high is sort of like a counter trend high. So we have the main trend, the counter trend. We're still basically in the bear, like when this started retracing, when this started dumping at this point, and it went all the way down to here and then came back up. People also thought at this point that, hey, we're in a bull cycle. We're in a bull cycle. Boom shakalaka. We're going all the way straight back up. We're going up to 100 grand or whatever it was at the time. They're thinking, $50,000 Bitcoin. But what happened? It topped out at 13,900, 14,000, and then it went back down again. And then it went all the way back down to the previous low, which was 3,400, and it mitigated it here. You see, it closed out this liquidity void. And then, and only then, as it made this spring, it came back up, created a third macro resistance break, retested, and then went up into the cycle that we know of here when we had the $60,000 Bitcoin back in November of 2021. The same thing, we had the peak here. This was the 60,000, 64,000, whatever it was. I don't know. $65,000, and then we had the sell-off, the ABC, the big ABC like they had here. Remember the big ABC here? All right, and then we came all the way down. We made a bottom out here at like, what was it, 16.5, and everyone's like, that's the bottom, that's the bottom. It could very, very well be the bottom. That's definitely the selling climax of this range that we're in now, SCLX and Wyckoff, if you want to do the Wyckoff thing. That's definitely the selling climax here, and then up here it could be the automatic rally, or if you wanted to do it on the macro, even up here could be the automatic rally. So, but what I want to show you is another, like we had this structure here. Let me remove the drawings again, and because I don't want to waste too much time. I know I could be long-winded, guys, and I apologize for that. Let me just get to this point, short and sweet, and then end this video. So here was the bull symmetrical we just talked about, and here is another structure that requires our attention also. This one is different from the bull triangle. This is a rising wedge. This is a rising wedge. We can draw it either from here like this. Either way you slice it, it's a series of higher highs and higher lows that are slowly converging. So it's not a parallel channel because the highs, even though the highs are rising, they are also they are not rising as high. So we're still, if it were like a ledge you were walking on, you would still be going up. It's just not straight up parallel to the series of lower lows beneath it. So it's forming like a point here, just kind of like this formed a point. This wasn't a parallel structure either. But I want to direct your attention to this rising wedge. Now, rising wedges are bearish. Rising wedges are bearish fundamentally. Textbook-wise, they are bearish. And we can get confirmation of the bearishness of this structure the same way we got confirmation of the bullishness of this symmetrical structure here. And that, my friends, is found in the vertical bar volume. You see how the price consolidated within this symmetrical triangle with these two tops here. You have the main top and then the counter. And then rising here as you have this first low and then the mitigation here, or the spring before it shot up and retested and kept going. So the way we knew that this was in fact going to be a bullish structure is we see throughout the range, we see demand here. Let me get this. Let's see. Do we have an arrow I can use? See if there's any arrows. If not, that's all right. All right, we'll just draw. So we have these two demand bars here rising up. So even though the price is consolidating laterally sideways, it's not really going up. It's just going sideways. And so we have accumulation taking place. We have both supply and demand here, both decreasing, which denotes accumulation of Bitcoin. And then when we had this upward action here, we have correlation in the demand. So the demand is also going up as the price action is going up. That's very, very important. You need to remember that. And then here also, demand is going up. Demand is going up even though the price is consolidating sideways. And then when we get down here on this breakout, we have a demand spike. It comes back and we have usually there's an obligatory supply as it retests, but this supply wasn't enough. It didn't precede the demand before it, and therefore the price wasn't able to fall back through the macro trend resistance. Instead, it bounced, and then we had the gargantuan markup. Now here, I want to show you. So now the price now is going up overall, wouldn't you say? It's a rising wedge after all. The price is increasing. We've had a great increase since we bottomed out back in when was it, November? And I think it was November. No, it was December, right, of last year when it hit 16.5 or whatever it was. We've gone up considerably since then. Now we're at what, $29,000-$30,000 right now. So the price has gone up, but look, as the price has gone up, the demand volume has also gone down. So we have divergence. Over here we had correlation. In this other area here we had correlation. We had demand going up with the price, and demand going up nonetheless, even though the price was consolidating. Here we have definitely a pronounced markup in price, but we also have a pronounced diminishment in demand. So that, my friends, is that just confirms the bearishness of this structure. See, when you read price action in conjunction with the volume, you get a double confirmation. So it's bearish enough that we have a rising wedge, but to have a rising wedge with diminishment of demand, it just solidifies the bearish stance, and that would make perfect sense. I think we're going to keep going up. We could definitely do another. This could put up another leg or two. We can even see $40,000 Bitcoin before we top out, like it topped out down here. Remember, we have this we have this counter trend top. See, we have number one and number two. We already drew this out. And then we have the low, and then the low is mitigated again after the number two, the low of the counter trend. So this is the low number. This is number one up here, and then this is the low, and it's going to top at some point it's going to come up here, and then this will be number 2, and then when this wedge breaks, we're going to go back down, and it's going to remitigate the lows like we saw down here. It's basically every cycle is more or less the same. There are some differences here and there, but more or less it's the same. If you look at the Wall Street cheat sheet of a bear cycle and the stages of denial and grief and all that, it's a very famous drawing. It shows like the psychology of a trade. You'll see the counter trends after a massive bull cycle like we had here, and the massive bull cycle we just came out of. That comes all the way down, and then it comes right back up. There's an automatic rally, and it keeps going, it keeps going, it keeps going, and FOMO traders jump in. But guess what? That's a counter trend. It's not a bull cycle. This is not a bull. This was not a bull cycle. This was still under the confines of this bear. Unless this counter trend exceeded this number 1 and went all the way up, then we could say, yeah, we entered into another bull cycle, and then it came back down. But no, this too was beneath the 1. It's within the geometric structure of the symmetrical triangle. Therefore, it falls under the macro bear cycle. And I believe today we are still within the macro bear cycle, even though we've come up since 16.5. So I may be completely wrong, but I don't think so. I think history will play out the way it's always done, and we're going to have another countertop, and then a retracement, a massive retracement. We're going to come back down. We may not come back all the way to the 18,000, 16,000 or whatever. We may break back down to 20,000, but I think we're coming back down after this wedge breaks. All right, guys, let me know what you think, and I appreciate your appreciate you viewing this, and hopefully it's food for thought. Let me know if you enjoyed this. This is a very, very simple technical analysis. We didn't do any Fibonacci or anything like that here, but sometimes simple is the best way to to do it. So sometimes you could just eyeball it and you see the structures pop out at you, and you see that's a triangle, that's a wedge, that's a bull flag, that's a bear flag, that's a top, that's a bottom, that's a double bottom, it's a double top, it's this and that, whatever. There's so many different structures, and the thing is, not every structure goes the way it's supposed to go all the time. But if you learn to read the structures with the supporting volume, which is called VSA, volume spread analysis, and you use it in conjunction with the price action, you get a even more in-depth look as to what the intentions of the composite operator or the market maker or the whales or whatever you want to call them nowadays could be doing in the interim. So, all right, guys, that's enough for me. If you like this, subscribe. I'll try to get some more videos out. I've got some more free time now, so I plan on uploading many more charts and just giving prognoses on Bitcoin, Ethereum, Matic, the big ones, DOT, things like that. Let you know Shiba Inu is another one, Luna Classic, which is Terra Luna. And so anyway, I'll have those out and we can discuss those also. So, all right, guys, and I'll put some charts on TradingView. Check me out. It's Hala Pablo on TradingView. I've got 80 to 85% win rates on my non-cluttered charts. This one's real cluttered, but that's because I've been drawing on it. But the ones that I actually publish and I put my targets, Fibonacci targets on there, it's pretty clear, and many people have made a lot of money off these charts. So I like helping people. So if this has helped you in any way, subscribe, like, and you'll be sure to get them each time I upload. All right, guys. Boy, I've gone on so damn long. I'm sorry. I'm going to go now and drink some more coffee, and I will talk to you later. All right, guys. Have a great day. Adios. Bye-bye.